Look, I need you to pay very close attention to what I'm about to share with you because what's happening in the silver market right now is something I haven't seen in my entire career. And I've been watching precious metals for over 2 decades. If you own 100 ounces of silver, or frankly any amount of physical silver, the next few weeks could determine whether you're positioned for one of the greatest wealth transfers in modern history, or whether you're about to watch an opportunity slip through your fingers that won't come around again in your lifetime. Let me start with something that happened 3 days ago that barely made the news. The COMEX silver warehouse stocks dropped by 2.1 million ounces in a single day. Now, if you're not familiar with COMEX, that's the commodity exchange in New York where silver futures are traded and where the price of silver is essentially set for the entire world. And here's what makes this absolutely critical. Those warehouse stocks are now sitting at levels we haven't seen since 2016. But here's the thing that should make your hair stand on end. In 2016, silver was trading around $14 an ounce. Today it's hovering around $31. So we have half the available physical silver in COMEX warehouses, but the price has barely moved compared to what's actually happening in the physical market. You want to know what that tells me? It tells me we're sitting on a powder keg, and the fuse is already lit. Now I know what you're thinking. You've heard this before. Silver's been about to explode for years, and you're right to be skeptical. But what's happening right now is fundamentally different from anything we've seen before, and I'm going to prove it to you with facts and data that Wall Street desperately doesn't want you to understand. Let's talk about what's really driving this situation. First Solar, one of the largest solar panel manufacturers in the United States, just announced they're expanding production capacity by 40% over the next 18 months. That's not speculation. That's a done deal. They're building new facilities in Alabama and Louisiana as we speak. Now, here's what matters. Every single solar panel requires approximately 20 grams of silver. It doesn't sound like much until you do the math. First Solar alone will need an additional 15 million ounces of silver annually just for this expansion. And they're just one company. The Solar Energy Industries Association just released their projections for 2025, and they're forecasting that solar installations in the United States will increase by 52% year over year. Globally, we're looking at solar demand consuming over 200 million ounces of silver next year. That's up from 140 million ounces just 3 years ago. And this isn't a trend that's going to reverse. Every government on the planet has committed to green energy transitions. The European Union just passed legislation requiring all new commercial buildings to have solar installations by 2027. China is building solar farms the size of small countries. But solar is just the beginning. The electric vehicle revolution is consuming silver at a rate that's frankly terrifying if you understand supply dynamics. A traditional internal combustion engine car uses about 15 to 28 grams of silver. An electric vehicle uses 25 to 50 grams. A hybrid uses even more, sometimes up to 80 grams. And we're not talking about a gradual transition here. General Motors just announced they're going all electric by 2035. Ford is investing $50 billion in EV production. Volkswagen, Toyota, BMW, they're all racing to electrify their entire fleets. Here's a number that should wake you up. The automotive industry is projected to consume 90 million ounces of silver in 2025. That's double what it was consuming 5 years ago. And that number is going to keep climbing because every major economy has announced bans on new internal combustion engine vehicles starting between 2030 and 2035. This isn't speculation about what might happen. This is industrial demand that's already baked into the cake. Now let's talk about something that nobody's really connecting the dots on: 5G infrastructure and the coming 6G rollout. Every 5G base station requires approximately 1 kilogram of silver. That's about 32 ounces per station. The United States alone is planning to install over 800,000 new 5G base stations by 2027. Do the math on that. We're talking about 25 million ounces of silver just for US 5G infrastructure. China is building out 5G at 3 times that pace. South Korea, Japan, the European Union, they're all in a race to build out next-generation wireless networks. And here's where it gets really interesting. Silver isn't just used in the initial installation. It's used in the ongoing maintenance and upgrades. Unlike gold, which sits in a vault and maintains its value, silver gets consumed. It gets used up in industrial processes. It gets embedded in solar panels that sit on roofs for 25 years. It gets sealed inside electric vehicles that eventually get scrapped. A huge percentage of industrial silver is gone forever. It's not economically viable to recover it. The Silver Institute estimates that only about 15% of industrial silver gets recycled. Compare that to gold, where over 90% of all the gold ever mined still exists in some form today. Silver is being consumed and destroyed at a rate of over 200 million ounces per year that's never coming back to the market. Now, let's talk about the supply side of this equation because this is where things get really concerning. Global silver mine production peaked in 2016 at about 900 million ounces. Last year, we produced 830 million ounces. Production is declining, not increasing. And here's why. There are almost no primary silver mines left. About 70% of silver production comes as a byproduct of mining other metals, primarily copper, lead, and zinc. When copper prices are low, those mines slow down or shut down, and silver production drops as a consequence. But here's the real problem. It takes 10 to 15 years to bring a new mine online from discovery to production. Even if silver prices doubled tomorrow, we wouldn't see meaningful new supply hit the market until the mid-2030s. The supply side is essentially fixed for the next decade while demand is exploding exponentially. Let me give you a specific example of what this looks like on the ground. Pan American Silver, one of the largest primary silver producers in the world, just released their production guidance for 2025. They're projecting a 12% decline in output due to declining ore grades at their existing mines. Fresnillo, the world's largest primary silver producer, is facing the same issue. Their ore grades have been declining for 5 consecutive years. This is an industry-wide problem. The easy silver has already been mined. What's left is deeper, lower grade, and more expensive to extract. And here's something that should terrify anyone who understands markets. The above-ground stockpiles of silver are vanishing. The U.S. government used to hold over 2 billion ounces of silver in strategic reserves. Today, that number is effectively zero. They sold it all off decades ago. China, which used to be a major exporter of silver, became a net importer in 2007 and has been buying aggressively ever since. India, the world's largest consumer of physical silver for jewelry and cultural purposes, imported over 200 million ounces last year. The physical silver that's available to meet this exploding industrial demand is disappearing, and it's disappearing fast. Now, here's where this gets personal for you if you own 100 ounces of silver. You need to understand that you're not just holding a commodity. You're holding one of the most strategically important industrial metals on the planet at a time when supply and demand fundamentals are more out of balance than they've been in modern history. But there's another layer to this that we need to talk about, and it has to do with the financial system itself. Silver has always been money. For thousands of years, silver was the primary medium of exchange for ordinary people. Gold was for kings and governments, but silver was what regular people used for everyday transactions. And that monetary history is starting to matter again in ways that most people aren't paying attention to. Central banks around the world are buying gold at record levels. The World Gold Council reported that central banks purchased over 1,000 tons of gold last year, the highest level since 1967. But here's what's interesting. Several central banks are also starting to accumulate silver. The National Bank of Poland added silver to its reserves for the first time in decades. Russia has been quietly accumulating silver alongside its gold purchases. These are not random decisions. These are strategic moves by sophisticated institutions that understand what's coming. And what's coming is a fundamental restructuring of the global monetary system. The BRICS nations, Brazil, Russia, India, China, and South Africa, along with several new members, are actively working on a commodity-backed currency system to compete with the US dollar. They've been very clear that this new currency will be backed by a basket of commodities, including gold and silver. When that system launches, and it's a question of when, not if, the demand for physical precious metals is going to explode in ways that will make the current supply shortage look like a minor inconvenience. Quick aside here, and this is important if you're thinking about your long-term financial security. If you have $100,000 or more in retirement accounts, traditional IRAs or 401ks, You should know that you can actually hold physical gold and silver inside those accounts through what's called a gold IRA. I put together a comprehensive guide on exactly how this works, how to do it without triggering tax penalties, and what you need to know about storage and custodians. It's completely free, and you'll find the link in the description below. This is something I wish I'd known about years earlier because it's one of the few ways to get real asset protection inside a tax-advantaged retirement account. Definitely worth looking into if that's relevant to your situation. All right, back to what's happening in the silver market right now, because we need to talk about the elephant in the room, the paper silver market versus the physical silver market. Here's something that most people don't understand. When you look at the price of silver on your screen, whether it's on a financial website or a trading platform, that price is being set by the futures market on the COMEX. But here's the dirty secret. The amount of paper silver being traded on the COMEX dwarfs the amount of physical silver that actually exists to back those contracts. The estimates vary, but most analysts believe there are somewhere between 100 and 250 paper ounces of silver being traded for every 1 physical ounce that exists in COMEX warehouses. Think about what that means. If even a small percentage of the people holding paper silver contracts decided they wanted physical delivery, the entire system would collapse. And we've already seen glimpses of this. In March of 2020, during the COVID panic, the spread between paper silver prices and physical silver prices exploded. You could buy paper silver for $12 an ounce, but if you wanted to buy actual physical silver coins or bars, you were paying $20 to $25 an ounce if you could even find it. Dealers were sold out. Mints couldn't keep up with demand. The U.S. Mint had to ration Silver Eagle production. That was a warning shot. And it's happening again right now, just more gradually. The premiums on physical silver have been creeping up steadily over the past 6 months. American Silver Eagles are trading at $6 to $8 over spot price. Canadian Maple Leafs are at $5 to $6 over spot. These premiums are telling you that there's a shortage of physical metal, even while the paper price remains suppressed. And here's why this matters for you if you own 100 ounces of physical silver. When this paper market finally breaks, and it will break, the price discovery mechanism is going to shift from the futures market to the physical market. And when that happens, the price of silver is going to have to rise to a level that actually balances supply and demand in the real world, not in the fantasy land of unlimited paper contracts. Let me give you some historical context for what this could look like. In 1980, silver hit $50 an ounce. Now everyone knows that was the Hunt brothers trying to corner the market, and yes, that was a bubble. But here's what people forget. Adjusted for inflation, $50 in 1980 is equivalent to about $185 in today's dollars. Silver would have to rise to $185 an ounce just to match its inflation-adjusted high from 45 years ago. And that was before solar panels, before electric vehicles, before 5G networks, before any of the massive industrial demand we're seeing today. But let's be more conservative. Let's look at the gold to silver ratio, which has been a reliable indicator of silver's relative value for centuries. Historically, the gold to silver ratio has averaged around 15 to 1. That means 15 ounces of silver would buy you 1 ounce of gold. For most of human history, that ratio held pretty steady, because that's roughly the ratio at which gold and silver exist in the Earth's crust. Today, the gold to silver ratio is sitting around 88 to 1. Gold is trading at about $2,750 an ounce, and silver is at $31. That means silver is historically cheap relative to gold by a factor of almost 6. If that ratio were to revert to its historical average of 15 to 1, with gold at current prices, silver would be trading at $176 an ounce. Even if it only reverted halfway, to a ratio of 50 to 1, silver would be at $53 an ounce. Now, I'm not saying silver is going to $176 an ounce next week. What I am saying is that the current price of silver makes absolutely no sense when you look at the supply and demand fundamentals, the historical ratios, and the strategic importance of this metal in the global economy. And here's where the time-sensitive part comes in. We're approaching a critical inflection point in multiple markets simultaneously. The Federal Reserve is in an impossible situation. They've got inflation that won't go away, a banking system that's fragile after the regional bank failures we saw earlier this year, and a government that's running trillion-dollar deficits with no end in sight. Every time they try to raise interest rates to fight inflation, something breaks in the financial system. Every time they cut rates or print more money, inflation roars back. This is exactly the environment where precious metals thrive. And silver, because of its dual nature as both an industrial metal and a monetary metal, is positioned to benefit from both the industrial demand surge and the flight to safety that happens when people lose confidence in paper currencies. Let me tell you about something that happened in 2011 that most people have forgotten. Silver went from $18 an ounce in August of 2010 to $49 an ounce in April of 2011. That's a 172% gain in 8 months. And that happened during a time when industrial demand for silver was a fraction of what it is today. There were no massive solar installations, no electric vehicle revolution, no 5G build-out. The move in 2011 was driven almost entirely by monetary concerns and investment demand. Imagine what happens when you combine that kind of monetary demand with the industrial demand squeeze we're seeing today. The move could be even more dramatic and, more importantly, more sustainable because it's being driven by real physical consumption that can't be satisfied by printing more paper contracts. Now here's what you need to understand about your 100 ounces of silver. You're not holding enough to get rich, but you're holding enough to protect yourself and potentially multiply your purchasing power several times over in the coming years. But only if you understand what you're holding and why you're holding it. Silver is not a get-rich-quick scheme. It's not a lottery ticket. It's a strategic position in a hard asset that's becoming increasingly scarce at exactly the time when demand is exploding. It's insurance against monetary chaos and a bet on the industrial revolution that's happening right now in green energy and technology. But here's the critical thing. You need to be holding physical silver, not paper silver. Not silver ETFs, not silver mining stocks, not futures contracts. Physical silver that you can hold in your hand. Because when the paper market breaks, and I believe it will break within the next few years, possibly sooner, the only silver that's going to matter is the silver that actually exists. And you need to be thinking about this in terms of ounces, not dollars. The goal isn't to sell your silver for more dollars. The goal is to preserve and grow your purchasing power regardless of what happens to the currency. In Weimar Germany in the 1920s, people who held physical gold and silver maintained their wealth while everyone holding paper marks was wiped out. In Zimbabwe in the 2000s, the same thing happened. In Venezuela over the past decade, the same thing happened. This is not ancient history. This is a pattern that repeats over and over again throughout history when governments destroy their currencies. The United States is not immune to this. We've got $34 trillion in national debt, and that number is growing by over $1 trillion every year. We've got unfunded liabilities in Social Security and Medicare that total over $200 trillion. The math doesn't work. At some point, something has to give. And when it does, the people who are holding real assets, physical precious metals, productive land, businesses that generate real cash flow, those are the people who are going to preserve their wealth. Your 100 ounces of silver is a stake in that preservation. It's a position in something real, something tangible, something that has been valued for thousands of years and will continue to be valued regardless of what happens to paper currencies or digital systems. But let's talk about the immediate future, because I think we're going to see some significant moves in the silver market over the next 6 to 12 months. The technical setup is extremely bullish. Silver has been consolidating in a range between $28 and $30 for the past several months, building energy for a breakout. The 200-day moving average is sloping upward, which is a bullish long-term indicator. The relative strength index is in neutral territory, which means there's plenty of room for upside movement. More importantly, the fundamentals are aligning in a way that we haven't seen before. The supply deficit, the difference between how much silver is being produced and how much is being consumed, is projected to be over 200 million ounces in 2025. That's the largest supply deficit in recorded history, and it's not a one-year phenomenon. The Silver Institute is projecting supply deficits for at least the next 5 years. When you have a supply deficit in any commodity, prices have to rise to either stimulate more production or destroy demand. But as we've discussed, you can't stimulate more silver production quickly because of the long lead times for new mines. And you can't destroy industrial demand because silver is essential for solar panels, electric vehicles, and electronics. There's no substitute that works as well as silver for most of these applications. So the only variable that can adjust is price, and it's going to have to adjust significantly higher to bring the market back into balance. Now, I want to address something that I know some of you are thinking. What about a recession? Won't that kill industrial demand for silver? It's a fair question, and the answer is more nuanced than you might think. Yes, a recession would temporarily slow some industrial demand, but the green energy transition and the electrification of transportation are being driven by government mandates and subsidies, not by market forces. The European Union has committed hundreds of billions of euros to green energy regardless of economic conditions. China is building solar and wind capacity at a pace that's actually accelerating. The United States just passed the Inflation Reduction Act, which includes massive subsidies for solar installations and electric vehicles. This demand is not going away in a recession. If anything, governments tend to increase infrastructure spending during recessions to stimulate the economy. And much of that infrastructure spending is now directed toward green energy projects that consume massive amounts of silver. Plus, in a recession, you typically see flight to safety into precious metals. Gold and silver tend to perform well during economic downturns because people lose confidence in stocks and bonds and want to hold something tangible. So, even if industrial demand softens slightly, investment demand could more than make up for it. The bottom line is this: the setup for silver right now is about as good as it gets. You've got a supply deficit that's growing, industrial demand that's exploding, a paper market that's increasingly disconnected from physical reality, and a monetary system that's showing cracks. All of these factors are pointing in the same direction. If you own 100 ounces of silver, you're positioned for what could be one of the most significant moves in precious metals we've seen in decades. But you need to understand what you're holding and have the conviction to hold through the volatility that's inevitably going to come. Silver is not a smooth ride. It's going to have days where it drops 5% for no apparent reason. It's going to have weeks where nothing happens and you wonder if you made a mistake. But if you understand the fundamentals, if you understand why you're holding it, those fluctuations become noise rather than signals. The people who are going to win in this market are the people who accumulate physical silver now, while it's still available at reasonable prices, and hold it through the chaos that's coming. Because make no mistake, chaos is coming. The global financial system is more fragile than it's been since 2008, possibly more fragile than it's been since the 1930s. Central banks are trapped, governments are broke, and the bill for decades of financial engineering is coming due. When that bill comes due, when the next crisis hits, and it will hit, the assets that are going to hold their value are the assets that are real, that are tangible, that can't be printed or created out of thin air. Silver is one of those assets. Your 100 ounces might not seem like much now, but in a world where the monetary system is being reset, where currencies are being devalued, where physical assets become the only reliable store of value, those 100 ounces could be worth multiples of what they're worth today, not just in dollar terms, but in terms of what they can actually buy. So here's what you need to do. First, make sure your silver is stored securely. Don't keep it all in one place. Don't tell people you have it. Physical security matters when you're holding real assets. Second, think about whether 100 ounces is enough for your situation. If you've got significant wealth in paper assets, retirement accounts, bank deposits, you might want to consider increasing your allocation to physical precious metals. The general recommendation from most financial advisors who understand this space is to have 10 to 20% of your net worth in physical gold and silver. If you're not there yet, now is the time to get there. Third, educate yourself. Understand what you're holding and why. Read about monetary history, about what happens when currencies fail, about how precious metals have preserved wealth through every crisis in human history. The more you understand, the easier it will be to hold through the volatility and the noise. And finally, be patient. This is not a trade. This is a strategic position. The moves in silver are going to be dramatic when they come, but they might not come on your timeline. You need to be prepared to hold for years if necessary, because the payoff, when it comes, is going to be worth the wait. The silver market is setting up for a move that could define a generation. The supply and demand fundamentals have never been more bullish. The monetary backdrop has never been more supportive. The industrial demand has never been stronger, and the physical shortage is becoming more acute by the day. If you own 100 ounces of silver, you're already ahead of 99% of the population who have no exposure to physical precious metals at all. You've made a smart decision. Now you need to have the conviction to see it through and the wisdom to understand what you're really holding. This isn't just about making money. It's about preserving wealth, protecting your family's financial future, and positioning yourself for a world where the rules of the game are changing faster than most people realize. The time to act is now. Not because silver is going to double next week, but because the window to acquire physical silver at reasonable prices is closing. The premiums are rising, the availability is declining, and the awareness is growing. More and more people are waking up to what's happening, and when the crowd finally figures it out, it's going to be too late to get positioned at prices that make sense. You've got 100 ounces. That's a solid foundation. Build on it if you can. Protect it regardless. And understand that you're holding one of the most strategically important assets on the planet at one of the most critical moments in financial history. The next few years are going to be wild. Make sure you're on the right side of what's coming.